All right, my friends, an anniversary of the 10 years since the market bottomed out in March 9th of 2009. We're going to do this fun one. We're going to look back in time of what the headlines were from from this case is December 2009, but the 10 years previous to that. All right. So now that we have 10 years behind us, we can say, yeah, we did okay. The economy did okay. Thanks to Obama. Thanks to Republican in Congress. Mostly thanks to you, the American citizenry, the most unstoppable force mankind has ever seen when we put our minds to it. The American population cannot be defeated unless we do it internally. And trust me, there are many, many trying to do that. But as we sit here today, usually cooler heads prevail. That's a fact. But anyway, so let's look back. At the end of 2009, Motley Fool did this article. It is funny as all could be. And let's see what they were talking about, the previous headlines from the headlines from the previous 10 years. Because don't forget, the bottom had already happened. All right, so now we had a wonderful end of 2009. So good times are here again, and so it's easy to make fun of those people 10 years previously. But let's do it because it is fun. It's fun to make fun of them. All right, so here's our friends at Motley Fool. And it all started with a panic. This is written by Morgan Housel at CFM Housel. I don't know what that is. CMF, yeah, so I don't know what it is. But anyway, I'm not even sure if he's still around. But it all started with a panic. And here's the headline. Y2K ripple effect could spell doom for many businesses. That was in the Business Wire on December 28th, 1999. That never happened, says our man Morgan. Then 3 days later, 5 days later, first day of Y2K uneventful, said the Associated Press. So the party continued. Watch this. Morning Post, March 26, 2000. Analysts agree market has only witnessed start of internet fever. No end in sight for tech craze. And then Morgan says the crazy showed up. Then the National Post, October 2nd, 1999. Dow 36,000? Why stop there? Some Wall Street pundits say there's no limit to how high it can go. And then Morgan says lured by riches. January 21st, 1999, USA Today. I'm looking over. Okay, good. Hold on a second. Boink. There we go. I got two computers going at the same time. USA Today. Bill Gates' net worth draws close to $100 billion. Drowning in denial. Scotland on Sunday, March 26, 2000. The stock market bubble that is likely to go on floating until sanity prevails, says Morgan. Guardian, March 24th, 2000. Bubble bound to burst when the cash fails to materialize. And then the fun ended. And then Guardian, December 30th, 2000. Bubble burst. Iron laws of the market bring a sharp dose of reality. Amazon, let's see. Amazon, Cisco, Microsoft, Yahoo shares crash. Hangover ensues. But just when we thought it was over. So remember, just think about that. Here is the headline, December 30th, March 2000. Bubble burst. Amazon, Microsoft, Cisco, and Yahoo. Now, Yahoo of the four would have been the worst one for sure. I don't know what happened to Cisco. I imagine it didn't do great. But Microsoft and Amazon, they did freaking fantastically well. Who would have known? Because remember, Amazon doesn't make profits. All right, so then we got September 11th, 2001. Two planes crashed into the World Trade Center. Tower collapses to the ground from the AP. Markets panicked. September 13th, 2001. Wall Street to remain closed in wake of terrorist strike. Adding insult to injury, Enron admits to overstating profits by about $600 million, says the New York Times in 2001 November. WorldCom says nearly $3.8 billion hidden in its books as the AP in June of 2002. And then Adelphia filed for Chapter 11 bankruptcy protection after scandal, and that's the AP in June of also 2002. How'd all that happen? Where's the regulator? I thought they were supposed to be there. It just shows you who's regulating the regulators. The regulators. That's the regulators. And don't forget Fannie Mae. All right? Those guys are just as brutal, just as corrupt, and yet those guys, Jamie Gorelick, Franklin Raines, and there's some Republicans too, they made off like bandits. They're not sitting in the prison, but the man from Enron died in prison. Skillett or Skilly, Jeff Skillett or whatever his name was, he got out on because they said prosecutorial abuse. He's out. A guy from WorldCom, Bernie Ebbers, I think he died. I don't think he died in prison though, but I know the guy Ken Lay from Enron did. I'm not sure what happened to Bernie Ebbers. I think he's dead. And then the guy from Adelphia, I remember that guy. I don't know what happened to him. But don't forget who is it? Angela Mazzillo from Countrywide, just giving politicians bank over bank over bank. And that guy, I don't think he ever served time. And he's just a scumbag, scoundrel. No other way around that. And these guys didn't serve time. So Bernie Evers, I think, is dead. I know Ken Lay's dead. Jeffrey Skillett, or whatever his name is, he got out from prosecutorial abuse. And the guy from Philadelphia, I think he went to prison, but I don't know. Enron was a standard for deregulation, says the Copley News Service in November 2001. Oh, that's right. By now, investors are disillusioned with stock market shenanigans, but no need to worry. Enron was not the standard for deregulation, but whatever. Cure for a burst bubble. Another bubble, says the National Post. And then our man Morgan says, okay, where? New home buyers, don't fret. Economy slows, but home sales are hot, says the Toronto Sun in 2001. Tell me more. Weathering recession. Housing market continues to roar, says the AP in March of 2002. And Morgan says, I'm listening. Fannie Mae sees no end to housing boom, says the UPI in January 2002. Sold, and it kept going. Housing market surges to record levels, says the World Markets Analysis in August 2002. And going. More people are looking to remortgage their property, says Money Management Magazine in 2003. Home construction soars to a 17-year high. October figures defy predictions of a decline, says the Washington Post in 2003. And it can't be stopped. Median home price up 9.1%, says the USA Today in 2004, which is creating all sorts of wealth. Buyers have turned rising equity into a major spending tool, says Washington Times in 2005, fueling all sorts of fun. Yeah, just real quick, I'll never forget, man. People buying, man, just it was nuts. It was nuts. I was in banking in 2002, 3, and until the end of 2004. And there was these things called ninja loans, no income, no job, or asset loans. And I'll just never forget. I'll never forget. We loaned to anybody. And I'll never forget my boss in banking. I was a branch manager coming in. We needed a loan to a minority. And literally, we could have picked anybody off the street and said, we will give you money. Because the Community Reinvestment Act, it had to be a minority. It had to be literally. We had to loan a mortgage to that person at any rate. It was nuts, and that's not just for minorities now. That's the law. It's not their fault. But whites were getting it too. Don't get me wrong. It wasn't just minorities. But I'll never forget the panic. This guy. Do we have one? I was like, dude, this is blatantly racist, man. And he was sitting there. Do we have one? Do we have one? I was like, have what? A minority to loan to because we got to hit the CRA or else we can't open up new branches. I said, we live in the Shenandoah Valley, man. I mean, just there's not A, that many minorities, and B, the ones that are out there, are they coming to us because we have pretty high closing costs? No, they're going to other places to loan. He goes, okay, we'll do whatever we can to do it. I said, how is that not discriminatory? Because if we're going to charge closing costs, no closing costs to this guy to meet our CRA standard, but I am going to charge it to that guy who doesn't meet our CRA standard, how is that not blatant discrimination against the other way? It's nuts. But anyway, we were loaning money left over right. It was crazy. Home equity lines of credit, home equity loans, 100% loan to value. I think there might be some that's 105% loan to value. It was crazy. 'Tis a season to go shopping. 5% surge expected, says FP Investing. I don't know what that is. Yeah, until people got nervous. Then steep rise in prices for homes as to worry about a bubble, says the New York Times in 2005. Even this guy spoke up. Greenspan is concerned about Roth and housing, says the New York Times in 2005. He's extremely observant. The irrational exuberance he had written about in 1995, now he's talking about the rational exuberance in housing. And he was spot on. I mean, let's not, we can bang on Alan Greenspan all we want for irrational exuberance, but the fact was he was spot on when it came to housing. Then in USA to 2006, January 2006, home sales dropped for third month in a row. Market cooling off faster than expected. And as my man Morgan says, the dam breaks. Desperation sets in while homes sit months with no offers. Yep. When does a housing slump become a bust, says the New York Times in June 2007. Remember, everyone just talks about 2008. Market decline and stock market. June 2007, we knew now the housing market was in a bust. We knew at that point. And that was foreshadowing what was to come in the stock markets because all these brokerage firms had tons of money in collateral debt obligations and derivatives and never mind just basic good old-fashioned real estate loans. And when real estate couldn't do what they thought it was going to do, and they're leveraged to the max, boom, bad things happen. When does a housing slump become a bust? And Morgan says, maybe when this happens. Rising defaults shut down 2 hedge funds. Bernanke says subprime fallout will hurt economy. That's in Washington Times 2007. Yep, and that's when he panicked. And then USA Today in August 2007, mortgage-backed securities spread U.S. subprime woes abroad. So remember, this was just subprime, all right, the below investment-grade lending cycle. So no one was really all that worried about it at that point because, I wasn't subprime. You probably weren't. 1907 panic. Subprime fallout draws comparisons until Bernanke flew in. Fed cut interest rate half point. Stock market soar. That's in September 2007. And before long, in October 2007, the Dow soars past 14,000 to register a new all-time high. Oh, man. October 2007, October 2, Dow soars past 14,000 to register a new all-time high. And our man Morgan says, sweet, crisis averted. Kane out as Bear Stearns CEO, and that's in January 2008. What the heck is going on here? Bear Stearns responds to rumors, says balance sheet liquidity capital remains strong. Phew, they had me worried there. I love that, man. Woo, they wouldn't lie to us. Shares of Bear Stearns plummet on fears bank is in danger of insolvency, says the AP in March of 2008. March 13, 2008, Bear Stearns shares plummet on fears bank is in danger of insolvency. But just literally 3 days before that, Bear Stearns responds to rumors saying balance sheet liquidity is strong. Bear Stearns, literally next day, Bear Stearns bailed out by Fed JP Morgan. So just 4 days previous, they said their balance sheet was strong. Then 4 days later, they had to be liquidated or bailed out. What? I mean, is that not lying? I don't. Thank you, J.P. Morgan Chase. Now carry on like nothing happened because J.P. Morgan bailed out Bear Stearns in March 2008, and the Fed did too. U.S. stock rocket rallies, Dow close above 13,000. That's on May in 2008. See, no problem how that easy it is. USA Today, September 8th, 2008. Taxpayers take on trillions in risk. Fannie Freddie placed under conservatorship. Wall Street chaos. Lehman Brothers, Bank of America buys Merrill. Government bails out AIG with an $85 billion loan. This is September 2008. Remember Hank Paulson? Freaking, again, another of the globalists on the Republican side. He was there to save us all. Save capitalism. And I guarantee he goes down thinking he's that same guy who's doing that now. He did that. If it wasn't for Hank Paulson, with your money, we would all be doomed, living like the Flintstones. Man, just crooks, man. All these guys just scratching each other's back. Just read up on him, man. It's just, and that was Bush's guy. Bush asked Congress for $700 billion for bailout. That's the AP in September 20th, 2008, and panic ensues. $700 billion for bailout. Again, this is when you socialize the risk and you privatize the profit. So Hank Paulson and his band of corporate titans got to privatize the profits. Same with Franklin Raines and Jamie Gorelick, who are on the left side of Fannie Mae, privatize the profits and socialize the risk. That means you and I take the risk, but we don't get the profits. Hank Paulson and his band of merry men, and Franklin Raines and Jamie Gorelick and their band of merry men and women, they get to take the profits while we take the risk. U.S. stocks slide. Dow plunges 777 points on September 29, 2007. Neurosis ensues. A month later, the Dow's up almost 900 points. And that's, 5 days before the election? We all give up. And then investors throw in the towel. On March 3rd, 2009, investors throw in the towel. Did they? Stocks move out higher as industrial production rises, according to Associated Press in September 2009. Barriers are reclaimed. Dow crosses 10,000 bucks in October 14, 2009. And now we end this story about where we started. December 23, 2009, the Dow is back above 10,466. Dow crosses 10,000, AP, 1999. Dow crosses back above 10,000. October 14th, 2009. It's a wacky year. But if you're just looking at price to price, you miss the dividends that you got. But remember, some of those dividends were negated big time during the bear market. I just find this funny, man. And a couple of things. Investors throw in the towel on March 3rd, 2009. The absolute wrong time to throw in the towel. And then the thing with Bear Stearns really takes me off, because Bear Stearns right there, March 14th, 2008, were bailed out by JP Morgan and the Fed. And yet 4 days previously, they said their liquidity, capital, and balance sheet remained strong. Well, there's the 10 years. What are you looking back in these previous 10 years? The Dubai debt crisis, you might not remember that, but I do. In 2010, we thought that, I remember getting calls when I was at USAA. People thought the Dubai debt crisis was going to spark another run in a negative way on stocks, and it just never materialized. Apple coming in, what happened to Apple? Some time ago, Apple came in short of where their expectations were. There's always a reason to panic. Always a reason to panic. You know who doesn't panic? The people who have no debt. The people who have cash on the side. Let that be you. All right. 4S's, subscribe, share, say your piece in the comments down below, and then smash the like button. Thanks now.